This is Chad Toyne with a Tuesday, September 2 Market Minute from Trader PhD Ag Marketing. Welcome back from a 3-day holiday weekend. It's September. Get out your pencils. We got some price targets that got hit in corn, so we got some new targets for you. On Friday, corn surged up another dime over the nickel that it surged on Thursday's reversal action. We had a sell signal on both old crop 24 and 25, as well as new crop 26, representing a 28-cent surge up off of the August low. Corn, crop years 24 and 25, new target December 25 at 446. New crop 26, new target December 26 at 477. Soybeans, crop years 24 and 25 stays November 25 at 1062. New crop 26 stays November 26 at 1086. Chicago SRW wheat, old crop 25 stays December at 555. New crop 26 stays July at 592. KCHRW wheat, old crop 25 now, December at 544. New crop 26 now, July at 586. Minneapolis HRS wheat, old crop 25 now, December 25 at 605. New crop 26 now, September 26 at 646. Cotton, old crop 24 now, October at 67.65. New crop 25 stays December at 69.49. So what happened to corn on Friday? Talk of tar spot and southern rust gave us the best one-day surge in the corn market since early July. Interesting to see the DEES 26 target of 460 get hit, leaving the DEES 25 target at 420 unhit for most of the day on Friday, short by just a single tick. But it hit in the last minutes of trading. Just another reason for you to leave those resting orders with your grain merchandiser to sell your cash grain when these future price targets get hit. You don't have to wait for it to hit and then to phone it in. It's just sitting there waiting to get triggered. On the charts, the corn price action continues to be firm. Corn was selling off earlier in the session today, but now we've got prices 6 cents up off of the morning lows. That's another intraday reversal higher. I know that looking at the daily price change doesn't look too exciting, both the DEES 25 and 26 up a penny, but the price action as a whole paints a more telling picture. I am optimistic about the corn market. Soybeans are down today, likely because of the failure of any announcement on the progress with the China trade talks. Bean oil could use a boost, so any new developments to aid the outlook in the biofuel front will help. The soybean chart shows that we are still holding this upper level since we surged up off of the lows, that August low posted on August 6. I'd call this an elevated trading range of 1027 to 1063 on the November 25 chart. I think we're going to remain here until some other bit of news pushes us one way or the other. I'm calling corn sideways to cautiously higher. I'm calling beans sideways for the time being. Let's talk about bean meal. Meal surged higher back when soybeans did, but meal has been falling faster than soybeans themselves these past few weeks. We are approaching a price level where booking meal for feed will make some sense. How to time this exactly is hard to say. I think a guy could step in here and book a little bit now and book a little more later and maybe a third round later still, all depending on how things pan out. For a long time, meal was in the doghouse and we were doing well just buying on an as-you-go basis. Maybe you can book a couple of months worth of feed now and a couple more months later when we say, and then a third batch later still. So consider today the first part of what might be a 3-part booking. I think meal has both a bottom and a firm footing. At least it's good enough to start the first of 3 possible bookings, to scale into things, instead of diving in the deep end. In the wheat markets, I wish I could elaborate more for you on wheat, but it's the same story. The KC contract struggles the most. Minneapolis isn't much better, but the Chicago is making a good showing, holding off making new lows. Maybe it's going to stick. If we can get more upside out of corn and beans, maybe wheat can follow along. In cotton, cotton is breaking lower here today with the December contract touching a support level. Let's see if it holds. Contract lows are lower still at 64.24, so that's a good $1.60 away. The price action itself doesn't seem to be all that threatening. It's just this breach of support. I don't think cotton is going to go all too far too fast. I'm expecting some kind of a short-term low to be put in this week. With any luck, it's today. In fats and feeders, last time I was saying that this market is still healthy and that I'm not seeing any warning signs yet. We had higher prices on Friday and now again here today. Last week's high is in sight and I'd expect it to be hit later this week, maybe tomorrow. I still see more fun to come. And in hogs, last time I said be on alert, we might kick out a sell signal in hogs here soon. But the hog market just kept marching higher, possibly following the cattle markets. Let's stand aside and let this market keep going. It looks like more fun to come. That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.